All right, gang. As you can see, more structure overall on a higher time frame. You can see the overall trend on a higher time frame easier. As you can see, we're in an uptrend. After this downtrend, we're in an uptrend. It's just easier to see the overall trend on the 1 hour compared to the 15 and 5 minute. We just use that for entries. We're in an uptrend, and price is still heading up. So let's go to the 4 hour. Let's go to the 4 hour as well to see, the higher on a higher time frame as well. Boom. As you can see on the 4 hour, we were in an uptrend from take profit. Price went almost up to take profit 7 from 1853. This is January 26th, and it shot all the way down to take profit 4 from take profit 6 at 1783. This is the highest point price been at this year is at 1854, and it shot all the way down to 1783. And now we're back, and now we're we're now back in the uptrend, back to take profit 3 area. Next key level, we get a push above take profit 3 area. It's take profit 4, take profit 5, eventually take profit 5, and eventually back to take profit 6. And then take profit 7's up here. We haven't been really up here yet. We're in an uptrend. Price will do the same thing over and over again. When price got to take profit 3, this was January the 7th. Take profit 4, January 7th at 1783. It shot all the way up to take profit 6. Then it shot back down from take profit 6 to take profit 4. As you can see, once price got to take profit 4 again, January 30th, it shot all the way back up to take profit 3, and we can go all the way back up to take profit 6. As you've seen, January the 6th all the way up to January the 24th, price went all the way up to take profit 6 at 1851, 1852, 1853 area. So gang, price will do the same thing over and over again. So we're waiting to see what price wants to do. As we scroll into the 4 hours for more structure. So you can see on the 4 hour candlesticks, on the 4 hour, we can see, the overall trend. We're in an uptrend from take profit 4 from January the 28th. This is where price, started at January 30th, 28th. See a little bit period of consolidation after this major downtrend. We see a little consolidation, and then we see what price starts to head up. From take profit 4. See this three candlestick pattern. One of our candlestick patterns will make 1, 2, 3 yellow candlesticks, 3 yellow soldier, 3 white soldier candlestick pattern. On a higher time frame, on a 4 hour time frame, lets us know that we're in an uptrend. As you can see, price will make market structure, make higher highs. Pay attention to to take profit levels. Extremely important. You see our take profit level, take profit 4, take profit 3. Once price got to take profit 4, it gave us a 3 yellow candlestick pattern. Let us know that price wants to go to take profit 3, and then we see what price heads up to take profit. We see a tweezer bottom pattern at take profit 3, and this lets us know that price wants to head up to take profit 2. Boom, and then what price makes structure. Price will make a higher low. We see 3 yellow candlesticks on the 4 hour. Let us know that price wants to go to take profit 2. It retests back down as we're in an uptrend. Overall direction is an uptrend. It will dip back down after going to take profit from take profit 3 to take profit 2. It will dip back down, making a higher low. Buyers getting once price makes a higher low, as price will go from great trade 1 to great trade 2. Buyers are in at great trade 1 and great trade 2. As price pushes all the way up to take profit 1. We see this bullish engulfing pattern. Like, pay attention to what kind of candlestick patterns form on take profit levels. As you can see on this take profit level right here, February the 3rd, it gives us a bullish engulfing pattern. Yellow candlestick on the right is larger than the black candlestick on the left. Yellow candlesticks are buyers, black candlesticks are sellers. This yellow candlestick is larger. Buyers are in more momentum and control than sellers, pushing price past sellers past sellers all the way up to take profit 2. And then we see a little consolidation after that at our psychological level. Like, these are our psychological levels: take profit 2, take profit 3, take profit 1, take profit 2, take profit 3. These are our psychological levels. This helps us trade. This helps us trade. You see take profit 4. This helps us trade. And we can see what price wants to do at our psychological levels easier. This is why we use psychological level. This is why we use trend lines, Fibonacci, as it helps us trade. So we would just wait for price to head back down to our psychological level, as it did head back down to our psychological level. After going to take profit 1, we see a bearish engulfing pattern from take profit 1 all the way down to take profit 3. So we just wait for price to make structure, make a higher low, wait for price to make a dip, and then what? Boom, price makes a higher high from take profit 3 to the guy in that great trade 1 and great trade 2 as buyers push price all the way back up. To take profit 2, we see consolidation. This is February 4th. February 6th, you see the 4-hour candlestick. Buyers push price all the way up to take profit 1 before sellers came in, push price back down to take profit 2 area, started consolidating that take profit 2 area, and then we see another 4-hour candlestick February 7th. And these 2 hours for these last 4 hours, we see price push all the way back up from take profit 2. We finally see this break out of this consolidation, and we see a push up from 1810 all the way up to 1821. So you have to pay attention to our psychological levels, and wait to see what price wants to do as price making structure, higher highs and higher lows, and higher highs and higher lows and higher highs and higher lows and higher highs on a higher time frame. So it's just easier to see the overall direction on a higher time frame. Price makes a higher high past our psychological level, or take profit 2 to take profit 1, and then we see at take profit 1, we see price makes a higher high past our psychological level or key area, 1812, 1813, our key area, take profit 1 all the way to take profit 2, and now we're heading up to take profit 3. As candlesticks are still above this trend line. You have to pay attention to what patterns will form on a higher time frame, as it will let you know the overall direction at our psychological levels, or let you know the overall direction. So you just have to be patient with this market as you're trying to swing trade this. And this move, this swing trade didn't happen until February the 4th, all the way up to February the 7th. This didn't happen until 3 days, 1, 2, 3, 4 days. You could have swung traded right here at the bottom, all the way at the bottom at take profit 4, but you couldn't have swung traded in the middle of the uptrend. So this is the middle of the uptrend. This is where you lose the most money at. Wait for price to go back to the bottom as you're trying to trade it at trade 1 and trade 2. Just wait for price to go back to the bottom at great trade 1 and great trade 2. And you could have rolled it all the way back up and swung traded all the way back up to take profit 2. And now prices slowly pushing up to take profit 3 as we're still in this uptrend. So these are our take profit levels, and they help us trade. And we just adjust into and adapt to what the market's showing us. This is on a 4-hour time frame. You can see the overall direction. You can just see that we're in an uptrend from take profit 4 all the way up to take profit 3. We're in an uptrend. We can just see more structure on a 4-hour and the 1 hour as well. We go back to the 1 hour. You can just see more structure, the overall direction on the 4-hour and the 1 hour. You see we're in an uptrend. After this downtrend, we're now in an uptrend. All right, gang. So I hope this helps. As we're going to scroll back into the 15, so I can show you more structure. And on the 15, on the 1 hour, I can show you as well. Prices making higher highs and higher lows. And higher highs. Let us know what boom prices in the uptrend. You get in once price makes a dip, once price makes a higher low, and you ride it all the way up to the higher high. Boom, get in for another buy. Boom, for another trade 1, trade 2, boom. Once price makes a higher low, at the bottom, this is where you make the most money. Boom, you lose the most money at the middle and at the top. For an uptrend, price will make a higher low and smash past your middle trade. You got in at the middles, price smashed past it, and depending on your lot size, the broker would have stopped you out when you should have just been patient, waited a day or two, as price would have made a higher low, and then you could have rolled it up and made a higher high and been in profit the whole time. Same thing here, just wait for price to make a higher low, and you could have rolled it up to this higher high and been in profit the whole time. All right, gang. So just think about that. Using everything. I just wanted to put everything together for y'all. For this market, understanding this market, it's about your psychology as a trader. It's about your psychology, and we'll discuss more of that in the next session. All right, gang.